Good morning, friends. Good morning, friends, and thank you so much for joining in today's SMS. So it's the 13th of July, and it's nice to see that people from across India have joined SMS, which is really encouraging. And we also see that there are a lot of discussions happening. So with this, let us start on time. So may I request Venuji to share the profile of Deepakji, who's volunteered to be the speaker today. Venuji, over to you. Yeah, Venuji. So I think Venuji is having some issue with the. So
thank you, and
yes.
very happy to have Deepak from Bangalore to be part of today's session. And are you? Am I audible? Am I audible? Am I audible?
Yes, you're audible.
Hello?
You're audible. Yeah,
Am
you're
I
audible.
audible now?
Yeah, you're audible.
Hello. Okay. So firstly, I'm happy that
No, again, you're not audible. So I think some GST glitch.
yeah,
that is there.
he runs
No,
he runs a
still audible.
consulting company, Positive Advisors Private Limited. He has completed his graduation from Bhagwan Mahavir Jain College, Bangalore University. He supports a lot of startups in setting up business, assisting them, and predominantly he is into indirect taxes advisory. He also appeared before NCLT on some of matters relating to company disputes. He's been faculty to ICA Board of Studies on indirect taxes subject. He also authored a book for ICS Company Secretary Institute on exploring procedural dimensions and taxation on online gaming industry, which is published by Taxman. He has 15 years of experience and predominantly into indirect taxes. He has presented papers on various forums like Institute of ASCOM, CSI, and the like. No, welcome to our semester. Today, we'll be looking at the which have been.
Thank you, Venu sir. So we've seen a lot of circulars coming in, close to 15 circulars, and then some more circulars gifted yesterday, just 2 days back. And the interesting part is, if you see the circulars, they just came 1 day after the notification has been issued. Okay, and then the heading of the circular says that in respect of the clarifications sorted by the trade and bodies. So the trade and body is so very uh, dynamic that they get a notification today and next day they ask the queries, or is it something else, right? Is it pre-planned? We really don't know. But whatever it is good that it is giving clarity as for a taxpayer and a tax consultant. So we will decipher that. But the previous circulars itself, which we're discussing in the SMS in the previous session, we couldn't complete all the circulars. So we'll complete a few important circulars and then move to the notifications, or should we go to the notifications first? Am I audible? Okay, so we'll go with the circulars first, no worries. So the circular first, which we'll discuss, is circular 216 on extended warranty, right? So generally, when we buy any kind of a electrical equipment or any kind of a vehicle, we get this option of getting a extended warranty, right? So what happens in case of extended warranty was there's a settled case that even before pre-GST, it was always decided that when you give an extended warranty, you do not charge anything in terms of giving that extra service or giving any parts, right? Because the definition or the nomenclature of extended warranty itself is such that when you come to me for any kind of a service during the period of warranty, I will not charge you anything. It's like a insurance which you're taking up upfront, and any kind of repairs or any replacement happens, I will not charge you anything. So then the question came in, for that, who will pay the GST, or pre-GST, who will pay the taxes on that? So then it was settled that in case of a warranty, like if you buy a car, you get a warranty. Now the pricing of this warranty charges, or the AMC, is always included in the cost of the car which is given to you. So you don't have to charge separately for this replacements every time. And the pricing is embedded, is blended in such a way that the pricing of this extra warranty, what you're getting for 1 year or 2 year, will be included in the pricing of the car itself. So this circular, earlier circular, which was given 195, it specifically said that, yes, this is the case that industry is following. So you don't have to charge anything additional for the warranty which you give later on. Now, what they did is they specifically said for replacements of parts everywhere. So it was clear that, okay, when you're replacing any parts, you don't have to charge at the time of replacement. You have to charge it initially itself, and having a nature of a composite supply, wherein the pricing of the main product is the principal supply, and this warranty is a additional supply. So the pricing of the car and the rate of the car will be applicable on this. And anyways, you don't charge a separate consideration for the normal warranty you're giving it. And they've considered specifically that it will include replacement of parts in the earlier circular of 195. Now they want to clarify through this circular that not only replacements of parts, if there's any replacements of goods, it also has to be read that all the conditions of 195 will satisfy. So that is first part. Secondly, now they're coming up with situations, what happens in specific scenarios. So they've given 5 scenarios. First is when under warranty, the manufacturer supplies replacement of parts or goods to the consumer without any consideration. What happens on the taxability and what happens on the ITC. So both these aspects they are confirming here. They say no GST is payable by the manufacturer on replacement of parts and goods supplied to the customer, as the cost of such parts and goods have already been recovered at the time of original supply, right? And GST is payable only if additional consideration is charged for the replacement. So during the warranty period, you have gone, they have done a checkup, right? And in that warranty, changing of the oil is not covered. Okay, engine oil is not covered. So if they replace such engine oil, they charge additional consideration for you. For that additional consideration, there will be a levy of GST that is acceptable, right? So on any additional charges, what has been levied on that additional GST will be levied, but on the parts and goods which is replaced, which is included in your warranty, will not be leviable to GST. Now, what happens to the input tax credit, ITC? on the replacement of these parts, you will get it. And this will not be considered as an exempt supply. Since you're supplying it now, right? You're actually delivering it or providing the service now, but the consideration for this was already received at the time of the original supply itself. So you cannot consider this supply as a exempted supply. So ITC is not restricted. And then manufacturer is not required to reverse ITC also because it is not a exempt supply. Okay, we'll go to the next scenario. We can have a discussion once we go through all the scenarios then. Second scenario is when under warranty, the distributor, okay, not the manufacturer, now the distributor is coming into picture. The distributor, he replaces the parts or goods on his own stock, right, to the customer who's coming to his doorstep, and he replenishes the stock what he's given free of cost from the OEM or the manufacturer. What happens in this case? Again, in this case, no GST is payable because the distributor is not doing any kind of a supply. He's replacing the parts under the, so he's basically providing a service to the manufacturer, but the receiver is the customer, right? So because the ultimate contract of this warranty is by the manufacturer with the customer, the distributor is indirectly supplying it to the distributor, to the manufacturer, and the receiver is the customer. And he's replenishing the stock what he's used for this activity. So this transaction is also not a supply because he will sell it, he will install it, how he will supply it, do the repair work on the vehicle for the customer, but the consideration for that is through a replacement. Okay, once it is replacement, no GST is payable by the manufacturer on the replenishment of such parts are distributed provided to the distributor. So distributor is getting the stock replenished from the manufacturer, and the manufacturer is replenishing, for which the consideration is again received at the initial stage itself. GST, again, the same clarification, it will be payable only if additional consideration is charged by the distributor to the customer. Again, and the input tax credit, question of reversal of ITC, again, extension of the first scenario, it will not be required to reverse because this is not a exempt supply. Third scenario is when an extended warranty is given to the customers at the time of original supply of goods by third party or OEM itself. So what happens is I have given a warranty of 2 years for a car purchase. Now I give an option to the customer saying that if you want, we can give you an extended warranty of plus 3 years. Okay, 2 years I'm giving you by default. If you want an extended warranty, I'll give you plus 3 years. So for this plus 3 years, I will charge you something. There could be two things, that either the manufacturer itself is taking the liability that, okay, anything comes up, I will bear it, or a third party is getting involved wherein if any replacement happens, this third party will be liable for replacement for the cost involved in it. What happens in that scenario? If extended warranty agreement is entered at the time of original supply of goods and the supplier of the extended warranty is different from the supplier of goods, then consideration for such an extended warranty will be treated as a separate supply and qualify as a supply of services. So when we spoke about this composite supply, okay, on a composite supply is when I give a car with the original warranty. Now extended warranty is not bundled, right? So it's a separate supply is what the circular is clarifying, that any extended warranty given is not an original supply. It's a separate supply and GST will be leviable on that as a separate supply, not as a supply of the principal product. It will not be treated as a composite supply. Fourth scenario, extended warranty is given to the customers at the time of original supplies by the supplier of original supply. So third scenario was when it is given by a third party. Now it's a situation where it is given by the original supply itself. If the extended warranty agreement is entered at the time of original supply and the supplier of extended warranty is the same as that as a supplier of goods, the consideration for such extended warranty will become a part of the value of the composite supply. The principal supply being the supply of goods, GST would be payable as applicable. So even in such scenario where the original supplier is giving, the circular is saying that it will become a composite supply. Okay, but I have my own doubts because I think this is actually not correct, because this extended warranty, when you say the meaning of composite supply, it should be bundled together such that it cannot be segregated. But this actually is a separate supply. A customer can opt for it or he need not opt for it. So it can be a separate supply, but the clarification in the circular says is, no, this is also a composite supply. We'll debate on this. Fifth scenario is extended warranty is given to the customers subsequent or after the original supply. Like I've given a car, warranty is given 2 years of normal warranty. At the end of the second year, I reach out to the customer saying that now do you want extended warranty? Yes, they say yes, they need it. Then at that point of time, what additional warranty they take, which is subsequent to the original supply, this will be treated as a separate supply itself, as we have seen in scenario T3. So this is a separate supply in itself. So this is the circular which says on extended warranty. Any kind of feedbacks on this or any discussion?
So the separate supply would be supply of service, right?
Supply of service, yes.
Now, the goods which are getting replaced in this warranty has no supply because it is included in the supply of service.
Correct.
So, irrespective of the goods rate, we should still charge at 18%.
Correct.
Why don't you feel it as a composite supply when it is issued along with the original supply?
Yeah, see, the nature of composite supply itself is such that it is not artificially bundled, right? It should be embedded in such a way that it cannot be separated. If you see the definition of composite supply, comprising of 2 or more supplies, one of which is a principal supply, will be treated as a supply of such principal. Definition says.
See, warranty is always bundled with the product. You can never sell a warranty when the product is not there. So can we not say that it is naturally bundled?
So then in that case, in scenario 5, I am giving the supply, the warranty, not along with the original supply of the product. I am giving it at a later point of time. So it means product is necessary, but the timing is not necessary. I can give it at the time of the supply itself, or I can give it later on also. For convenience, if I've given it at the time of supply, but it is not like the customer should buy it. He can either opt it or not opt it.
So when there is an option, it can never be a composite supply, right? It will be a mixed supply only. Because some people might take it, some people might not take it.
Transportation of goods is an option. So you can still not say that it cannot be a composite supply.
Venugopalji, I totally agree with you, because whenever I am, say, booking a room in a hotel, option for a breakfast is always there. Whether I opt it or not, once I opt it, it becomes part of composite supply. If I do not opt it, it's still a supply of room individually. So I go with you that even if there is an option, but a customer is expecting that a warranty is to be given along with the goods, whether it is a normal period warranty or extended period warranty. The only difference with extended warranty is that normally the manufacturer takes the warranty of a 1 or 2 year, but in case of extended warranty, it goes to 5 to 6 years. So the nature of the contract remains the same, that it is a warranty. Only thing is that a period is extended.
Even I agree with this view. Otherwise, when there is an option given to this, why there would be a concept of composite supply?
Yes.
And whether a single price should be charged, or they can have two separate price, one for the cost of goods and one for the extended warranty.
It hardly matters.
Still, it is
even if I
composite.
bifurcate composite supply into two, then
Even if we have two separate invoices also, it will still be a composite supply. Not necessary that in a composite supply, you should have things in a single invoice or single price. So I'm issuing two invoices also. I feel it will be a composite.
Yeah, the definition per se, if you see, yes, what you're saying may be correct, that it's a supply of taxable percent or recipient consisting of two or more taxable supplies in any combination, which are naturally bundled. But I'm very reserved with the word, is it actually naturally bundled? I feel it is not naturally bundled, because this warranty, you can give it now or you could give it later on also. So my reservation is only because it is not naturally bundled. I'm at that conclusion.
Correct, Deepak. But I wanted to get, when we say naturally bundled, it's only a timing. You can never have an extended warranty without original product. So that means warranty is going with the product. It is an option when I can take it now or take it later. For example, say air condition along with installation. Installation can also happen, let's say 3 months later, once the site is ready. But still, it is naturally bundled. So a different timings of the supply may not make the supply as not a composite supply. That's my view.
So Venu sir, this is Gaurav from Ahmedabad. I just have a small view here. When you say that the warranty cannot go without the product, then if that the case be so, a Honda City headlamp can go only with the Honda City. So would that mean that we have to charge cess on that as well at 28% plus cess? Because
Yeah,
it will not go without the product. It will not go without product. If I hit a car, maybe 6 months after I buy it, will I require to pay on the headlamp 28% plus cess, because that headlamp can only go with the Honda City, as an example?
Exactly. So that is why circular is saying, if you are issuing extended warranty along with the product, it is a supply of product. If you are issuing 1 year later, it is a separate supply. Same goes with your Honda City headlamp. When sold at the time of the product, it is part of the product. You are buying it 6 months later, it's an independent supply.
But if you see the example that is given in the mixed supply, I feel this transaction will be more of a mixed supply. So what the illustration for mixed supply is, a supply of a package consisting of canned food, sweets, chocolates, when supplied for a single price, is a mixed supply. Each of these items can be supplied separately also and is not dependent on any other. It will be a mixed supply. So you can buy the warranty separately from outside vendor also. There is no compulsion that you have to take it from the OEM itself.
Yeah, but warranty is always linked with the product. So that is what it is making it as naturally bundled.
Ma'am, if we go through the educational guide which was issued for naturally bundled, it said whenever a supplier is expected to provide something and whenever recipients expect that it would be provided along with the goods. So extended warranty is a concept which is generally now prevalent all across the trade, wherein it is offered along with the goods. It is not offered separately. If I go that if a product is merely can be supplied later on, therefore it becomes part of mixed supply, then there cannot be a composite supply, because composite supply definition already say that it has to be supply of two taxable supplies. So there has to be two different supplies wherein they are merged to be treated as a composite supply. Like I gave an example of hotel and a breakfast. It is there that even if I opt for a hotel room only, and subsequently after staying I go and have a breakfast, still there are two supplies. But since I have opted for the breakfast later on, not at the time of booking of the original hotel room, therefore they are treated as two different supplies. So as Venugopalji has said, that if both are being supplied at the time of supply of goods, that is vehicle and extended warranty, it becomes part of the vehicle supply. And if they are being offered separately, that is later at a point later on than the sale of vehicle, then it becomes two different supplies. Yes, Jigaji, it is the timing of the transaction. Now, one thing which I would like to discuss is that The circular say that if the warranty is being supplied along with the vehicle. Now, this does not go only for warranty, but also for other services. That is the RTO service which are being provided, not the amount which is deposited along to the RTO, but the amount which is being charged by the dealer for their services for getting the vehicle registered. Every vehicle, every dealership, almost all dealerships charge the RTO services separately. That it may range from 500 rupees to 2000 rupees. Along with that, the concept of FASTag, because the motor vehicle rules have been amended to provide that FASTag has to be installed on the vehicle before the supply of the vehicle. The motor vehicle rules were amended in 2020 or 21, wherein FASTag become mandatory. So the concept which has been given in this circular at the same time becomes applicable for the RTO charges or the documentation charges or the FASTag which is being provided before the vehicle. Now, what happens is that, in my opinion, how can it be identified that it has been given along with the vehicle or subsequent to the vehicle? Whenever a person goes to buy a vehicle, generally a quotation is given that this is the amount which is payable, and on the basis of that quotation, the bank finances it. So the first and foremost document which would make it evident that these were the goods or services which were provided before or at the time of supply of the vehicle. Because if the FASTag or the RTO services or extended warranty is part of the quotation, then the first hand inclination that these were supplied along with the vehicle would be coming from that documentation. So in the entire transaction, that quotation part becomes important, because in the entire transaction, this is the only document which can provide or hint the department that these were given before or at the time of original supply. Because if they become part of composite supply, they become taxable at a higher rate. If they are treated as separate, then they become taxable at the rate of 18%, whereas the vehicle is taxable at the rate of 28% plus cess.
So are you saying in terms of additional services, say insurance and FASTag, since these are also supplied at the time of the delivery of vehicles, and as you're saying statutorily, it is required that you need to do this before moving the vehicle out. Will this also be treated as a part of a composite supply?
See, that is what I'm saying, that this circular, the principle which has been laid down in circular is not only relevant for extended warranty, the department would be extending it to those services also, because whenever a vehicle is going on the road, it is mandatory that it should be registered with the RTO, and if it is not being used within the local territory, then a temporary registration has to be granted. For that, the dealership also charges separate amount for the given the temporary registration. So the principle laid down in this circular is not only relevant for extended warranty, and in some cases, the department in future might use it for the other services. Although I'm not saying that they would be mandatorily covered, but somewhere down the line, it would be having an implication on those services or goods also.
So then the impact is they will all get taxed at 28%.
Yes, yes.
There, I think the distinction should be made is it is given as a sale point that the dealer is saying that, okay, I will give you everything.
Yes.
It is not a compulsion for me to go with it, except FASTag, which you're saying. Apart from that, the insurance.
No, FASTag can also be purchased from a separate dealership, separate person. Only thing is that it has to be installed before the delivery.
Okay.
So the thing which has to be seen is that whether the dealership is providing that, just in the case of extended warranty, I can take it from other supplier before the supply, and if I take it from the original supplier, then it becomes part of composite supply.
No, even if you take it from the original supply from the same dealer, what my argument is that it is still a additional service which I'm getting from the dealer, not because I cannot get it elsewhere, it's just because of my convenience. So it will still be, in my view, treated as a separate supply and not as a composite supply.
So whenever we look at composite supply, right, the classic example that comes to our mind is a camera and the camera case. You can never buy a camera without the case, so it is definitely a composite supply. But when you look at extended warranty, it is not so. You can still buy the car and buy.
Ma'am, in my opinion, see, I can buy goods without transportation also. the transportation can be taken from a separate person also. So in case of warranty, see, what is a warranty? Can it not be taken from any other person? It can be taken, but generally in trade, it is being provided by the person who is selling the car. Take an example, room plus breakfast. Can I not take a breakfast from any other person? I can take it. But if the original supply is providing me the breakfast, then it becomes a composite supply. So the timing, whether it is being opted before this, at the time of contract of the goods, it becomes important because the if we go through what is a naturally bundled supply, since these are two taxable supplies, so always there can be two different suppliers. But the thing is that whether the trade is providing commonly along with the goods or whether the recipient is asking it to be provided along with the goods or the services.
Okay. Venu sir, your points before we conclude this point that yes, we have 2 point of views which is possible.
Can I add one more before Vinu sir says? Jigar here.
Sure, sir.
So sir, like with respect to the other services, what we just discussed, the insurance, RTO and everything, it is the point at which the supply is concluded and subsequently these add-ons are mandatorily required to be taken before the vehicle is put to use in terms of the road movement. So although a person is paying the lump sum amount for the individual components, per se, it will not trigger the composition aspects because the original transaction per se of sale of car has been concluded, the chassis number has been identified, and subsequently these events are taking place. So I am of the understanding that those insurance RTOs, otherwise also in time to come, should not be considered as a composite supply from the department perspective as well.
Jigarji, section 15(2), anything which has been required to be done by the supplier before the delivery of the goods.
Jigarji, imagine
Yes,
a
sir.
situation where a hospital treatment, the invert patient is also given medicines which is required to be consumed at home. So his consumption is post-discharge. So do you say that that wouldn't form part of the composite supply?
Sir, I am of the understanding that I agree that before delivery, sir, delivery is happening at the point of itself when the invoice is generated. Now, along with the delivery, there are additional compliances of the other laws.
Delivery is not happening at the time when the invoice is generated. There might be a case that invoice is generated, but the delivery requires that certain things have to be done before the goods are delivered.
Correct.
Just
So-
like AC with the installation.
Correct.
AC billing is done, but the installation is at the house. So delivery would not be completed until the installation is completed. So that's why the installation becomes part of the value.
So, sir, just because I am availing services from the person who is actually supplying me the car, vis-a-vis I am availing services from third party where they are actually charging 80%, and just because I am taking from them, it will be then to be considered as a principal supply being goods taxed at higher rate. So, is it not an anomaly in terms of taxation?
Jigarji, it goes other way also. Just like the example given by Venugopalji, I take one step back. Whenever medicines are being supplied by the hospital during the course of a treatment, it becomes part of the treatment. They become a exempt supply. But the hospital say that we would only providing medical services during the operation, and you have to buy the medicine. So in that case, I have to pay charges to the tax to the medicine shop. Although if these are provided as a package, I don't have to pay any tax. So it does not happen that how the concept of composite supply is vis-a-vis who is supplying me the goods and how they are being supplied, whether they are being provided in a naturally bundled way, or if I am availing separately from the different supplier, obviously tax rate differential would be there.
Okay.
So I go with Arpit's views, and this is of the same view I have from the beginning. That's my note, Deepak.
Okay. We'll move ahead because this will continue on composite supply. But we can at least confirm that yes, there are two views possible. We may need some more concrete cases at least to conclude which way it will go.
But yes, Deepakji, this principle would be creating a lot of tremor in the industry, not only for extended warranty, but for also other services.
Yes, lot of hidden things behind the circular. Yes, sir. Next is the circular 218, which is on loan by an overseas affiliate to an Indian affiliate. So the issue was what happens in case supply is involved in a transaction of granting of loan by a person to a related person or by an overseas affiliate to an Indian entity, where there is no consideration in the nature of processing fees or admin fees, or there are no charges levied, and the consideration being paid is only the interest or discount. And in such scenario, whether any GST will be applicable on this. So one thing is notification number 12 2017 says for interest, for any consideration for granting of loan, credit or advances is exempted. So in that scenario, what happens? The circular clarifies that when there is no consideration involved, it is clarified that when processing administrative or any charges are not charged for extending a loan, then GST is not leviable. When processing admin charges is levied and which is charged over and above the interest or discount, then such charges is treated as a supply of service and liable to GST. So another thing to be considered along with this is we have to whether read this circular in isolation or should we read along with circular which says that in case of any import of services, okay, this is basically saying that by overseas affiliate to an Indian entity, so reverse charge would come. And then we have another circular which says that nil, in case you don't raise an invoice, then nil is also a value, zero is also a value. So how do you read both the circulars to make it a complete reading? So here it is clear that there is no kind of a artificial valuation. When there is no charges levied, then there is no GST. If there is any charges levied, then you are liable to GST under RCM.
Deepak, what I would like to add is that this circular, when we talk about nil value being considered as a value, so therein the condition is that the recipient should be eligible for the credit. Only in that case, nil. This circular goes one step ahead that whether or not recipient is eligible for the credit, still it would be considered as nil because these kinds of supplies are not being provided in case of loan by affiliate entity. But then again, this circular again tries to identify and make a distinction between loan being given by a normal entity and loan being given by an affiliate entity. That these are the services which are being provided for charges made, and these are services are not being provided by the affiliate entity is providing loan to its own entity. So in cases wherein similar services would be called in question, wherein the recipient is not eligible for credit, this is an artificial distinction which we can make as a part of our submission whenever inter-branch services sought to be taxed between two persons, wherein the recipient is not entitled for the entire credit. Just like in case of a brand being used. Now what they are saying is, whenever a bank whenever charges are being charged by bank, they are being charged for these kind of services which a affiliate entity is not required to carry out. So when in case of a brand being used, what we can say that whenever a subsidiary company is using a brand of a holding company, it's naturally coming that the subsidiary would be using that brand because what I normally say that a son would be using the surname of a father. He does not need a right to use that surname. It comes naturally. So similar concept which they have given in this case that normally it is not expected that an affiliate entity would be carrying out these services. So in the case of brand also I can say normally it is expected that the subsidiary would be using the brand name of the holding company. Therefore, no charges should be levied, treating it as a service between two related entities.
Okay. Okay, any other view before? So in case of branding, sir, might be a little difficult to extend this circular there, because yours, it is very specific, saying that they have compared the loan activity of a foreign affiliate to an Indian affiliate, and they've specifically said that these charges are not levied because they don't have to evaluate. But in case of a brand, why it is different is it's a different entity. Even though it's a holding and a subsidiary entity, you have a distinction in terms of entities itself, right? So Indian entity, if it has to do something, it needs to get permission from the holding company. By default, holding company will give the permission to its subsidiary company. That's a separate issue. But for that transaction itself, it needs to enter into a right. Otherwise, the right is always of the holding company's right. It can always say, no, for the subsidiary, I will not give you the right. So in that perspective, I think.
So right given without consideration, Deepakji?
Right given without consideration is fine. But if right not
so,
given.
So then do we induce a value in tax?
Because of Schedule 1, we have to induce a value, and because of Rule 28(1).
No, then again, this circular say that normally these services are not being provided by the affiliate. See, if the valuation has to be done, then it has to be done similar for the both the cases. You cannot say that independent entity would be carrying out a verification, so they would be charging. It does not only include charging, but it also includes the documentation. Do we not see any documentation being made between a foreign entity and local entity, even if they are affiliate? There has to be a documentation. So there are services. But this circular goes one step ahead and say that even though there might be, but they would not be charging in similar cases. So therefore, we would not be levying any tax. So what I am saying is that if an affiliate entity which is situated outside is making a documentation, they are giving a loan on the basis of that documentation. But the circular says that normally they do not charge. So therefore, in case of branding also, I can say that yes, holding is allowing the subsidiary to do, but normally they do not charge.
No, Arpitji, whenever there is a documentation, then there will be actual payment also by the domestic entity to the foreign entity. So in that case, RCM and all those things will get caught by entry 4 of Schedule 1. So there is
documentation. Documentation can be to bind the local entity to pay. It will never include that. What I am saying that since there is what this circular says that even though there might be a documentation, but the foreign entity does not charge anything from the local entity for these services. Therefore, there would not be any supply since there is no value being charged. Although for similar cases, there might be value being charged between two independent parties.
Yeah, for a being supply to get in, I feel there should be some service that is actually rendered.
Madam, service rendered with a value being $1, $100, $1,000. Do you want to override the value?
Venuji,
Sir, I have a doubt.
Yes, Mr. Sharma, you can please put your point.
Sir, would the same stand be applicable for corporate guarantee also? Because now that it is clarified that for corporate guarantee, 1% is leviable. So, like you said, how a son would be using the brand of a father, but the government has not considered that point for corporate guarantee. So, with respect to corporate guarantee, it is clarified now that it is leviable to tax. And now that the recent circular has also clarified that for the period prior to the date of circular, it will go by Rule 28. So still, shall we consider that that viewpoint will hold good for brand? That's my doubt.
Sir, as I always say that there are three stakeholders. One is the legislature, second is the taxpayer, and third is the administration. So these circulars are the view and interpretation of the administration, and that's why they are not binding on the taxpayer. The taxpayer can always have their views, and the corporate guarantee saga would not be settled by issue of circular, in my opinion, wherein there will be huge revenue implications. Somewhere down the line, some of the taxpayer would be challenging that. So yes, in case of revenue neutral situation, or in case wherein the aspect is the impact is not big, the people would be opting for the safer view. But yes, in case there would be huge revenue implication for the taxpayer and huge revenue outgo, he might still challenge the corporate guarantee because it is only clarified, and the taxability aspect is still yet to be decided in GST regime. Although it has been decided in service tax regime, but in that case the provisions are a bit different, so it is yet to be decided in GST regime.
So you mean to say that even we can contest the same point with respect to corporate guarantee also,
Yes,
just that it is
see, the
clarified.
corporate guarantee case, the holding company which is giving a corporate guarantee has a stake in the subsidiary. If they would not be giving corporate guarantee, the subsidy would not be able to work. Their entire stake would be their entire financial amount would be at stake. So it's a compulsion to give a corporate guarantee. It's not an option that if I'm not giving a guarantee to subsidies, they can go and take a guarantee from someone else. Just like a director is required to give. Yes, the RBI circular only provides that nothing can be charged from a director for giving a guarantee, but at the same time, in case of a corporate guarantee, supposedly a person A has given a loan of say 10 crore rupees to B, and now B, when it starts to conduct a business, the bank requires that A has mandatorily give a guarantee to B. Does A have an option to not to give guarantee to the B? A has to give because his 10 crore rupees at stake.
Okay, sir. Fine, consider. Thank you.
Again, Deepati, we can move ahead to the. Yes.
Am I audible, sir? May I come in?
Yes, sir. Definitely, sir.
Sir, from corporate guarantee, I'll wish to come back to the circular which is being displayed on the screen. So, in my view, this circular is not about whether consideration has been paid or consideration has not been paid. The circular in detail talks about whether there is a supply or not. Consideration part due to Schedule 1 between related parties is in any way ignored. The thing is whether there is a supply or there is not a supply. So this circular says in detail that the overseas entity, in case of related persons, there may not be the processing. So we cannot say there is a supply. It is not about consideration. It is saying there may not be any processing involved. But if they have charged processing fee, that means there was a processing by whatever name, processing, administrative or loan granting charges. So the question is about establishing the supply. It is not about having the consideration or not. The essence of circular, in my view, is about that. So if they are saying there may not be any supply, it may be difficult to establish that there is a supply for administrative or loan granting charges. Obviously, nothing has been charged. It is the department which is trying to establish, yes, that there is a supply. Of course, there will not be any consideration because they are related persons, but still there is a supply. That is what department was trying to establish. And this circular clarifies, no, there is nothing sufficient to say that, yes, there is indeed a supply without having been a consideration. If there is a consideration involved, that means both the parties are consented that there is a supply. That is the essence of the circular, in my view, please.
So what Arpit sir told us that there is no supply per se in case of brand, right, sir? That's what your point.
Yes, yes.
So accordingly, the corporate guarantee can also be contested on the same view, saying that there is no supply involved.
Yes.
Right. We can extend it there. So wherever they come to these things, so even the taxpayers can take support of these, like administration does for circular, for piggybacking to other, as Arpitji was saying for the previous circular regarding composite supply, can it be extended to fast tags or other things like, so taxmen will try to establish that. So even the taxpayers can take support of these for other also to the logics which have been established by this. So that initiative can be taken by taxpayers also.
Okay, fine. So But what good point you brought in is that the corporate guarantee is not settled, even though they're trying to settle it through amendments, retrospective changes. One last question I have for you, Arpitji, that in spite of bringing it in rule, do you think still it can be questioned? Because now the corporate guarantee is there under 28(2) in the rule itself, and not only through a circular.
Deepakji, what I always see that section 7 is the base section which provides that there has to be a service involved. And once there is a service, then comes the question of valuation.
Okay.
And for service, there has to be two independent parties entering into a market base, wherein it's a compulsion on me that I have to give to protect my interest. Can I say that there is a service? Because there's one, I always refer the judgment of Bombay High Court. In 2 or 3 sessions previously, also that is, I'm not remembering the name, but therein they have specifically said that supposedly a person has rented a house. Now in that house is not being vacated by the person who was staying there. And when the court says that for the part of illegal occupation, this is the amount that has to be paid. Now that whether then that amount can be treated as supply of service. The court said there is no service involved. So whenever I see a transaction, I always see that whether at all I can say that there is a service. If yes, then I will go on to the valuation aspect. There is no service, I will not go to the valuation aspect.
Point noted.
Right, sir. That is what this circular says about. This circular is not about valuation or having received the consideration. It is about the supply. If supply is there, only then the valuation. Very rightly said.
We'll move to the next circular. This is on monetary limits for filing appeal by the department. Now, according to the national litigation policy, they have tried to reduce the threshold or set up a threshold saying that beyond which the department will not go on appeal, right? Now, they've set a limit that at the tribunal level, it's 20 lakhs, High Court level 1 crore, and Supreme Court level 2 crores is the level set. Now, this level has some exception saying that these levels will not be applicable. Firstly, what has to be considered that if it is only for tax, tax should be considered, interest, only interest, for penalty, then only penalty. And where it is late fees, only late fees. If it is interest, penalty, and late fees, then again the aggregate amount. So the amount has to be considered based on this criteria. But more than this, it is when this monetary limits will not apply. It says that when any provision of the GST is struck down as ultra virus, when any rules made have been held to be ultra virus, where any order, notification, or any instructions are treated as ultra virus, or when the matter is related to following aspects, which is valuation of goods, in case of any classification of goods, or any refunds in any aspects related to place of supply, and any other issue. So they've kind of kept it open-ended, saying that department will say that, no, this is a issue which is pertinent to us, and we are going for the appeal still. The question here is, can we challenge the appeal itself in the appeal, saying that how did the department come on appeal when they had set up a limit? They will always say that, no, we had other issues because we have the liberty or we have the open-endedness that we can go on any other issue. And what is this any other issue is not defined here. Might be we'll see some other clarification in the future saying that on this specific matters, the department has decided to go on appeal.
So Deepakji, let's take an example that I filed an appeal before the Commission of Appeals stating that in case of section 16(2)(c), no action has been taken against the supplier, therefore no denial of IT should be there. And the amount involved is say 10 lakh rupees. Now, how would this circular say appear? Because there is no ultra vires of 16.2c. There is no ultra vires of valuation of ultra vires of notification. Now, in this case, there is no issue of valuation, classification, refund, and place of supply. Now, this any other issue comes to the fore. What you have said, that how this any other issue would be interpreted. That in case of a 16.2c, when the Commission of Appeals decide for a 10 lakh issue, that since no action was taken against the supplier, therefore no demand can be created against the recipient. So again, this any other issue has left the ambiguity open. And as you have rightly said, that the department will always say that this is falling under any other issue, so we would be challenging. So this any other issue needs to be clarified before it can be implemented in the manner in which there was the intent to have this.
Arpiji, what I feel is that in any other issue, any other issue of fact cannot be brought in. Like in your case, as you have rightly said right now, that it's a matter of fact that the action has not been taken against the particular vendor. So that's why the Commission of Appeals has given the order in my favor. So in this, since all the other conditions are not there, so here taking out any other issue would be a challenge. Mainly, I think for interpretation matters, valuation, classification, they would be getting a leeway. But the Honorable Sestats, I think, or the High Courts, they will not take a lenient view in case of any other issue, because this has to be taken, this has been left open with, so that it cannot be envisaged or imagine as to what could be the situation that could be, for which department may have to go in appeal. But I think if they go for every matter as in any other issue, that would be a challenge then.
Arupta, any other issue has to be read with, which is recurring in nature and or involves interpretation of the provisions of the Act, the rules, notification, circulars, etc. That line is not here in the PPT. Any other issue cannot be read without that. It is not totally the independence. Any other issue which is recurring in nature and involves interpretation of the provisions.
Yeah, mainly interpretation issues they could be brought in.
Yes.
So, Aruti, then in that case, the ITC matters of 16.2c, if they are struck down by the Commission of Appeals on these issues, so where the people would be saved from this subsequent litigation aspect up to 20 lakh rupees.
Yeah. What I feel is that if there is some genuine.
Arupji, you went on mute.
Yeah, I think for genuine cause, department can go in appeal, but for any random reason, they cannot go to the appeals now. That would be a major, because we have seen recently in the Sestats also, they're taking a very strict view about this, that when there is a national litigation policy, which is saying that litigation should be reduced. So again, at the instance of just any random reason, the department cannot go into appeal. Okay, so I think we are about 3 minutes away. So Deepak ji, any other view on or any other member wants to share any other view on this?
Any other view?
Sir, I had raised the point about order being adjudicated for multi-years in a single go. So whether the threshold is year-wise or is it we have to see that particular order itself?
Can they pass an order for multiple years? I mean, at least show cause notice, it's possible. But I think order has to be for each year.
We are seeing orders for multiple years in a single order.
Okay.
So the single DRC 07 for multiple years, you're saying, right?
Yes, yes.
But I think, sir, if it is a single order and multiple show cause notices, then this limit should be read like the individual show cause notice, which I think it's on that basis, sir. Because normally Commissioner of Appeals passes single order for 563, 567 appeals. And that there's orders, appeal numbers are also 5 or 7, appeal order in appeal numbers are also, it's like 501 to 506. It's like that, sir. So I think if a single order is passed, individual show cause notice limit will be considered.
Sir, when department takes up audit, sir, for multiple, they start the audit from 1718 to 1920. And show cause notice also issued for the full period in one show cause notice, and it is adjudicated also as a single order. So many cases
madam,
we are.
then madam, it is one order only. Then it is one show cause notice, aggregate amount will be taken. That's it.
Soumyaji, what I would like to add is that what is happening in Rajasthan, that CGST is passing one common order, but when they are uploading DRC 07, they are uploading DRC 07 for individual years, separate years. So although there is one common order, but DRC 07 is being uploaded for the different year. And in my opinion, in that case, even though there is a single order, but if separate DRC 07 are being uploaded, individual limits for those years would be seen. So therefore, whenever this is happening, we should insist upon DRC 07 being uploaded on the portal.
Yeah, same is happening in West Bengal also. One order, but DRC 07 is separate for each year.
So
separate
sir,
20 lakh limits would be applicable for each of the DRC 07.
Sir,
Yes.
sir, you mean to say that there is a one single show cause notice for 5 years, single show cause notice, and the order when it is passed, all the 5 years individually DR07 is there.
Yes.
Because then DRC07 has to be considered an order, independent order. Basically, DRC07 is the order only, na? That is
Right. So
Sir,
I think
sir, it is the limits are there only for tribunal onwards. So in tribunal, it will not be the original order which is OIO which is being challenged. It will be the order in appeal. And in the circular, it does say at point number 8 that in a composite order which disposes more than one appeal or demand notice, it includes by a slash also. So the monetary limit shall be applicable on the total amount of the tax, etc. involved, and not on the amount involved in individual appeal. So that is clarified in the circular itself at point number 8 of 3, third 8.
But Gurjiji, if there are multiple DRC 07 for say multiple DRC years, then I would have to file an appeal for each of the DRC 07 separately for each year. And
it
even
is,
though they
okay, right. It is for the department to file the appeals. The monetary limit is for them, and the circular at point number 8. If Deepak ji is sharing the screen, if he can share that circular third 8. In my view, it reads that in a composite order, the limit would be on the total amount which is there and not on the amount involved in individual appeal or demand notice. So it is not about individual demand, or if you can share that. Yeah, right. So this is point number 8. We have to read this and again, a small significance here is it is only for the amount which is to be disputed, not the amount involved in the order. If the entire order is being disputed, that is another method. But it is the disputed amount. Say the original order was for the appellate order was for 30 lakh rupees, and government, the department intends to file an appeal, let us say only for 15 lakhs, then it will fall within the limit. It is not the total amount involved, it is the amount involved in dispute. That is what point number 7 also says.
Right. I think we would be happy to continue the discussion forward, but it is like 10:03. So going with the watch, so we'll have to close here. And maybe we can continue the discussion because still we are left with the notification being issued. GSTR 1A, which has come up with a lot of clarifications from a lot of other angles. So maybe we can continue with that in the next week. So for today, we'd have to call it a day. And may I now go to Arpit ji to share the vote of thanks to Deepak ji for the wonderful insights that she has brought, and also to all the members who have joined in large numbers today. Arpit ji, over to you.
Thank you, Ruji, and thank you, Deepak ji, for today's session. And it was really enlightening to be part of this discussion and the principles being laid down. And I always say that kudos to the speaker for giving this time to prepare and share, and all the members to attend here and share their views, because even if one view is relevant for me, then it becomes a great great part to become part of this session. So thank you, Deepak ji, for your enlightening session, and looking forward to much more participation from the members of the group.
For the opportunity, sir.
Arup ji. So Arup ji is on mute. So I would conclude the meeting and thank you, Deepak ji, for your deliberation.
Yeah. Thank you everyone. And so let's close the meeting, and we'll be meeting again next Saturday at 9 a.m. Thank you very much. Deepak ji, you'll have to close the meeting actually. Thank you, Deepak ji. You can end the meeting for all.